Hello and welcome to the Weekly Forex Outlook at xm.com. We'll be discussing upcoming central bank decisions from the Fed, the Bank of England, and the Bank of Japan, as well as how upcoming US and Eurozone data may impact the markets. I'm Maria Pachardez, and joining me is lead investment analyst Rafi Boyachian. So Rafi, let's begin with the Fed, which will deliver a decision on Wednesday. Do you think officials will keep interest rates on hold again? And what are we expecting from the non-farm payrolls report on Friday?
So, Maria, we do seem to be headed for a pause, and that's because the Fed has repeatedly suggested that they're going to proceed very cautiously when it comes to any further rate hikes, and that's because there's a lot of uncertainty around. Even though a lot of the data in the U.S. Continues to suggest that the economy is doing well, the outlook is very uncertain, and of course, the latest geopolitical events in the Middle East add to these uncertainties. The main worry, though, for the Fed is the fact that we haven't yet seen all the effects of previous tightening. So that's why they're being more cautious. But the Fed has also signaled that they do see a scenario where that might warrant further tightening. For example, should they see inflationary pressures pick up again, particularly when it comes to wages, and we see at the moment we are seeing some signs of maybe a bit of a cool down in the labor market, but should we see a reversal of that, or consumer spending remains stronger over the coming quarters, then that could potentially prompt the Fed to hike again. But for the time being, I think they are worried about over tightening, so it's unlikely we're going to get any rate hike, and even December as well. That's a big question mark as well. And markets are convinced that the Fed now will be on pause, and they're pricing in a number of rate cuts for next year. And that's where the risk lies for the US dollar, because if the Fed continues to signal the higher for longer stance, then over time we may see those rate cuts being priced out, and that would further boost the US dollar. And then, of course, even if Powell in his press briefing maybe is a little bit dovish, and one reason why we could see some dovishness is because we are seeing, of course, the rally in treasury yields, and we've seen a number of policymakers, including Powell, suggest that the higher yields kind of does some of the tightening on the part of the Fed, so that kind of lessens the need for the Fed to do more. So that could be one reason why we might see Powell sounding somewhat more dovish. But then, of course, a couple of days later, we are going to get the jobs report for October. Last time we had a very strong payrolls print. We're very likely going to see a much more modest increase this time round, but nevertheless, the forecast of around 172,000, that's still a pretty healthy figure for this late stage of the tightening cycle. So should we get another upside surprise in the NFP numbers on Friday, then that could also be a potential positive for the greenback.
Moving over to the UK now, the Bank of England will meet a day after the Fed on Thursday. Back in September, the BoE announced a surprise pause. What are we likely to see this time, and how might the pound be affected?
So that pause was a bit of a surprise, and we're not expecting any changes either at the Bank of England's November meeting. However, we are going to be getting a new set of inflation and growth forecasts, and so it's going to be interesting to see, whether or not the Bank of England is going to be more confident about meeting its inflation targets sooner rather than later. And of course, the inflation in the UK does remain one of the highest, or if not the highest, among the big economies. It was unexpectedly held steady at 6.7% in September, but we are probably going to see a very sharp drop in UK inflation over the coming months, mainly because a new lower energy price cap came into effect in October. So we could well see inflation drop maybe as low as 4% by year end. We shall have to wait and see what happens there, but that would at the very least support the Bank of England's argument for a pause. But when it comes to sterling, of course, we do have the weak growth prospects weighing on the pound. The UK economy is struggling at the moment, and of course that is another reason for the Bank of England to stay on pause.
Turning to Japan now, there's a growing speculation of a surprise policy tweak by the Bank of Japan. Can you tell us about that and how it might impact the yen?
Well, the yen is under increasing pressure because, of course, we've got this widening yield differentials between the US and Japanese yields. And, of course, that's pretty much it's the same picture with all the other major currencies against the yen. So the Bank of Japan is under pressure to do something if they don't want to intervene in the FX market, which is something that other countries don't like to see when the central bank intervenes in the FX market. But of course, the main priority for the Bank of Japan is inflation, and we did see core CPI in Japan drop below 3%. And so inflation pressures appear to be easing off. Well, maybe on the surface, but actually other measures of underlying inflation do continue to point to elevated price pressures. So actually, we may see the Bank of Japan raise its inflation outlook for the next 2 years, and that would give it a good case to go ahead and potentially make another tweak to its yield curve control policy. Last time, which was not that long ago, back in July, they did raise the hard target on the yield target on the 10-year yield from 0.5 to 1%. So a further widening of the yield band and raising the cap from 1 to maybe 1.5%. That could potentially provide some relief for the yen, at least in the short term.
And finally, regarding the Eurozone, we'll get flash CPI readings for October on Tuesday, along with flash preliminary estimates of GDP growth in the third quarter. How might all this data impact the Euro's next moves?
Well, the euro really has been on the back foot since the ECB's policy decision. Of course, the decision to keep rates on hold was expected, but we did get clearer signals from President Lagarde that rates have probably peaked. Of course, I don't want to say this outright, but those are the signals that we are getting. And if we have a look at where growth is headed, things aren't looking good. So the preliminary estimates of third quarter GDP, they're expected to show that the Eurozone economy contracted 0.1% in the third quarter. And when it comes to the flash CPIs, we are probably going to see further declines. The headline CPI is expected to drop to 3.4%. So taking both of those into consideration, then not only does that build the case for ECB rates having peaked, but also potentially a rate cut coming at some point in 2024. And that's why we are seeing the euro struggle against the US dollar.
Rafi, thanks so much. This was the Weekly Forex Outlook here at XM.com.